everyone, welcome back to Gen B. I'm your host, Zoomer Cincy, and today I'm going to be talking about something that's pretty topical, which is gold. I'm going to be comparing this to Bitcoin and just showing you a couple charts that I've been looking at as sort of like long-term indicators of where we're at in kind of like global economics. I'm looking at things priced in gold and Bitcoin, which you'll see here in a sec. And yeah, this is just kind of something I've been thinking about. These are charts that I've been looking at. There's been a lot of talk on, obviously, the metals, which have been running like gold and silver, and comparing that to the Bitcoin price action. And, there's a lot of people saying that the metals are really the stores of value and the safe havens during uncertain economic times such that we're in right now. And I wanted to kind of dig into what's really going on and where we're at. Right here I'm looking at a Bitcoin price chart priced in gold. As you can see, we're way far down from the peaks. And we had a brief all-time high in 2025 priced in gold. But really, we've kind of hit this level 3 times, and we've come off of that hugely, partly because of the running gold and partly because of the downturn in Bitcoin. But you can see we're kind of at this trend line. If you could draw a trend line right here, kind of like a moving average, and I wish I could pull one up on this chart, but we are kind of sitting at this support level of Bitcoin priced in gold. And what I really want to dig into here is I think, at least from my perspective, that you're sitting at a huge opportunity in Bitcoin here, especially priced in gold. And I think, honestly, gold continues to outperform other assets from here, but I don't think it's going to outperform Bitcoin from where we're at right now. And last I checked, I think gold was around $4,800 an ounce, hitting new all-time highs today, and Bitcoin is around 89,000, 90,000. It's kind of going back and forth as well. A lot of chop in the Bitcoin market right now, but I really want to break down this investment thesis of gold versus Bitcoin, because I think gold is a great monetary asset, but I don't think the value of holding it is higher than holding Bitcoin. I think Bitcoin is the superior monetary asset. Bitcoin is the superior money. And I don't think a lot of people have wrapped their heads around that yet. Even a lot of people who study Austrian economics, big time gold bugs, stuff like that. I just don't think they've wrapped their heads around this yet. And there are things, there are properties of gold that I'm willing to concede are superior to Bitcoin, but I just don't think they outweigh where Bitcoin outperforms gold. And I'll start with a straw man, because honestly, I'm huge. I'm very heavy in Bitcoin. It's the biggest portion of my net worth. But I'm going to start with the benefits that I see of gold over Bitcoin. And one is it's truly at its core the only monetary asset. You could throw silver in there as well, but gold is superior to silver for a number of reasons. But it's the metals are the assets that are truly governed by Mother Nature. They cannot be changed at a fundamental level, because they're like gold is just an element. It's an element that exists naturally in the universe, and there's nothing we can do to change that as human beings, and I think that's pretty powerful. And another thing that I'm willing to concede that Bitcoin or that gold is superior to Bitcoin is that, a lot of times we have debates at the protocol level, what should we do about quantum computing? What should we do about this or that? And that can lead to a lot of confusion, especially for people who are holding the asset. If there's a fork of Bitcoin, such as during the block size wars, people are like, well, should I hold Bitcoin? Should I hold Bitcoin Cash? What changes are being proposed here? What's actually changing with Bitcoin Cash? There is no hard fork of gold. There will be no fork of gold. Gold is gold. It's not going to change. It's ruled by Mother Nature at its core. And at the end of the day, there can't be some blue-haired developer that says they're going to confiscate your gold. That's just not going to happen. I was recently listening to an interview. Matt Odell was interviewing Matt Corallo, and Corallo was laying out his argument of why we should freeze the spending paths of coins of Bitcoin that is susceptible to a quantum attack, which I think is just absolutely preposterous. I think Bitcoin loses its fundamental value proposition if coins are frozen or seized at the protocol level. Like, it just all goes to shit. I would sell my Bitcoin if that happened, because I hold Bitcoin for the property rights that are enshrined in the protocol. But this just doesn't exist in gold. Now, I know that when the gold price goes up like this, the new issued above ground supply goes up faster than before. It has an elastic supply demand relationship. There could technically be an infinite supply of gold in the universe, all these things, which is why Bitcoin is superior to gold. But there are a few things that I think we're seeing in gold that are shining, for a lack of better phrasing there. And I do think that it's going to contribute to how long it takes for people to really transition to thinking about Bitcoin as the superior safe haven. Now, with that said, I will say the reason why Bitcoin is up 4,600% in gold terms over the last 10 years and has gone through multiple bear markets when priced in gold and made new all-time highs when priced in gold, even with gold performing fantastic, is because Bitcoin is the superior monetary asset. And what do I mean by that? What makes a good money? A money has a scarce supply. A good money has a scarce, finite supply. It's hard to make more of it. And like I was just saying, there's technically an infinite supply of gold, which means you have no guarantee on the future purchasing power value of the gold that you hold personally, hopefully physically and not through paper ETFs. And the supply-demand relationship with gold and its price is elastic, meaning that the higher the gold price, the more gold is going to be circulating in the above-ground supply. Because if it was previously not economical for you to mine for gold at a certain deposit, and what I mean by that is you would have spent more money going to get the gold than you would have been able to sell it for, then that gold's going to stay in the ground. But when the price of gold skyrockets and it becomes economical, it becomes profitable to go get that gold in the ground, the supply of the above ground gold, which is circulating, increases. And that can have an effect on the price in fiat currencies and the purchasing power that your gold has if you're not keeping up with the new supply. And in Bitcoin, it's an inelastic supply-demand relationship. We have a fixed issuance schedule in Bitcoin. When Satoshi mined the first ever block, the subsidy was 50 Bitcoin plus the fees of the transactions in the block. And every 4 years, that subsidy gets cut in half. So it went to 25 and then 12 and a half and then 6.12 whatever. And now it's like 3.1 whatever. And that'll get cut in half in 3 more years. And then 4 years after that, that gets cut in half. And eventually, when we get down to a subsidy of 0 and the Bitcoin that the miners are getting is purely just fees on the transactions that they mined in the block, there will be 21 million Bitcoins in circulation, and there will never be more than 21 million Bitcoins in circulation. So not only do we have a completely a mathematically provable finite supply in Bitcoin, but we have a supply schedule which is set in stone, and we know what the new supply is going to be pretty much every day through 2140 when the subsidy ends and all 21 million Bitcoin have been mined. And since the previous halving, even though you have 3.1 whatever new Bitcoins being mined in every block every 10 minutes, the total year-over-year inflation rate of the supply of Bitcoin is now less than 2%, which is below the average gold mined supply every year, which is around 2%. And in times where the gold supply is increasing such that it is right now, the mine supply is probably actually higher than 2%. So Bitcoin, not only does it have a lower inflation rate than gold currently, but that inflation rate's going to zero, and it's mathematically provable. And that issuance is completely decentralized through proof of work around the world by anyone running the mining hashing. So in that way, in its supply, it is superior to gold. Well, how else is Bitcoin superior to gold? Money needs to be easily divisible, and gold is not easily divisible. If I want to pay you $1 in gold, that's going to be challenging. And as the price of gold increases, your coins, your bars, whatever, they increase in purchasing power with it, and it can be hard to make everyday payments. This is why we made paper money. This is why we had fiat money. Well, I guess it wasn't fiat at the time. It was just paper certificates of hard money. But this is why we had paper money in the first place, is that we couldn't send Bitcoin, we couldn't send gold around the world in easily divisible units, and as we became a more global economy, we couldn't send gold around the world quickly, and so we created paper money, which was easier to divide, and it was quote unquote backed by gold, which was the actual hard finite asset preserving your purchasing power in the money. And money is just a social contract between people, which is supposed to keep track of how much time and energy you've put into society so that you can then spend that time and energy at a later point in time without needing to rely on barter systems, because barter systems don't scale at a bigger societies, because not everyone needs what you're producing. Yeah, I mean, people don't even really understand what money is, that it's a social construct. It's a representation of the energy that you've put into society that you should be able to redeem at the same purchasing power level as when you put in the work. So if I want to save the energy that I put into the world for 10 years, I should be able to redeem that energy at the same purchasing power level as what I put in. And since paper money has been unbacked by gold and printed into oblivion, then the purchasing power of the energy you put in at one point in time is diminished. It goes down over time. And what Bitcoin allows with its finite supply is I can store the value of my energy and my time over long periods and know that it's not going to get inflated away. It's not going to get debased. And furthermore, I could divide the Bitcoin up into extremely small fractions to where I can send fractions of a cent over the internet at the speed of light. And it's the actual asset. It's the actual Bitcoin. And so that's very important. And furthermore, gold has, and the other metals have, industrial use cases. This is why when assets get monetized, it's actually damaging to the economy. Like when people are using houses as savings accounts, when they're using gold as a savings account, when they're using silver as a savings account, the asset is priced at the cost of production. So how much did it cost for you to produce this metal? Plus, what is the industrial value of this metal? What's the supply-demand relationship there between, gold that's going into electronics and silver going into whatever that they use silver for? It's that plus then the monetized value of the asset. So plus how many people are just holding this and not willing to sell it because it's their savings account. And when you have an asset that's used in the economy that has a use for something other than being money, you're driving up the cost of the asset because it's being used by a savings account. So gold is not priced where it is because of the supply-demand relationship in electronics. It's priced where it's at because people are using it as a safe haven from inflation. And that can be damaging to the economy. It's damaging in the housing market. People buy multiple houses, multiple properties because they use them as savings accounts. And so it drives up the price of a house for someone that actually wants to live in it and use it as a house. And that's very destructive to an economy, to a society. And so when people say Bitcoin is not real, it has no actual use case in the world, that's the point. Its point is to be the sound money, and that's it. and not to be some kind of industrial asset plus money. We just need money that's sound, that has a fixed supply, that can be sent peer to peer without a third party. And that's what Bitcoin is. And so that's a huge, huge benefit of Bitcoin over gold, is that it doesn't have an industrial use case. Its pure purpose is to be sound money, is to be the ultimate asset to protect yourself against inflation. And so I think that's lost on a lot of people, that like actually the gold and silver and these things having industrial use cases makes them worse money. So yeah, that's just something I'd like to put out there. And then also the fact that Bitcoin is instantly verifiable by anyone running the Bitcoin code, which anyone with a computer can run the Bitcoin node software. And you can verify every transaction that's ever happened in Bitcoin, that it's truly valid, that the Bitcoin that you hold is real Bitcoin. And with gold, it's not only is it time consuming to verify if it's real gold, it's also expensive. You've got to melt it down and put it together. And that can be expensive to verify. And, a lot of the time there is fake gold floating around in the market, and it can be very damaging. That's fraudulently inflating the circulating supply, and people just aren't able to easily verify that it's real gold, and that makes gold a worse monetary asset than something that's instantly verifiable, and verifiable by anyone, and verifiable without relying on a third party. Can you melt down your gold and personally verify it that it's real gold? Do you know how to do that? I bet you don't. But anyone can just download the Bitcoin software and verify every single transaction. Anyone can do that. And so that's a huge benefit of Bitcoin over gold. And so, I'm just thinking about this. I'm thinking about these things. I'm looking at this Bitcoin chart priced in gold, and I'm seeing opportunity. I'm seeing a lot of negative sentiment in the Bitcoin market. I'm having, friends that know I'm involved in Bitcoin dunking on me, sending me silver price charts, telling me I'm in an inferior asset. And I think they're retarded. I think they're wrong. And I think there's huge opportunity here. So this is the Bitcoin chart priced in gold. I've kind of gone over, why I think Bitcoin's the superior monetary asset to gold. I haven't really gotten into how it's backed by proof of work and the whole mining angle, but I'm not really looking at that at the moment here in these charts. So here's the other chart I was looking at. This is the S&P 500 priced in gold. You can see it's actually never come back from the .com bubble, and I'm wondering if I can I go back to the all-time chart? No. Okay, so this chart looks like it goes back to... Okay, so it does go back. Okay, so this peak that I have right here, August 1929, is right before the Great Depression. And then you can see the Great Depression here. We made a new all-time high, again, priced in gold in the 60s. And then you had the 70s inflation, which brought us actually below. In 1980, we were actually below the bottom of the Great Depression. That's really interesting. And then you can see through the 80s and 90s and early 2000s, the computer internet boom. And then you have the .com bubble, which was actually the peak of the S&P 500 priced in gold, was 2000. We've never taken out that high again, which is interesting to think about. If you were to compare this to a dollar chart, that would not seem like it's the case at all. And since 2011, so this downturn from 2000 actually continued. It was just one downtrend from 2000 through the great financial crisis in 2008. You can see that here. It kind of accelerates for a time, but really this is just the same downtrend when you're looking at equities priced in gold. And since 2011, we've seen a rebound. We kind of peaked up here during 2022 after COVID. Like, you can't even really see COVID on this chart. And we've kind of been going down since then when priced in gold. And that's mostly due to the gold rise in price as opposed to stocks actually going down in fiat terms. But they have been going down in gold terms. And so when I look at this chart, I mean, honestly, I don't really see... Personally, I can't really tell, like, is this going a lot lower? Is it going a lot higher? I think there's a lot of potential scenarios. I think one thing I'm thinking about is the gold price is definitely going through a repricing right now. There's a lot of it's not like this is just like a typical gold run. Like, we're seeing structural things happening here. We're seeing sovereigns dumping US bonds, dumping European bonds, a real shift away from the traditional global reserve system since World War II. And I think there is a very real trend here where people are losing faith in the fiat system and are fleeing to hard assets like gold and silver and Bitcoin. And so I think there is a very real chance that we print fiat currencies to try and plug these holes, and that drives the gold, silver, Bitcoin prices a lot higher than what people think they can go. And in theory, that would drive this chart lower to where stocks would be lower in gold terms. But at the same time, you've kind of got this, you can see, if you go back to here through the 80s and 90s, that was a time of computers and the internet building its base, and kind of seeing the gains there, as well as, in 1971, we went off the gold standard. And so there was a lot of fiat printing as well, but stocks were able to still beat the gold. I think there's a chance we go through a similar type of situation where AI, robotics, all of this kind of thing really leads to just unprecedented productivity and booms and newfound wealth for lots of people, and that could drive equities higher and could potentially drive the prices higher in gold, depending on what happens with gold. But then at the same time, I'm looking at the fiat currency situation and the sovereign debt situation, and I'm like, this can only go one way, which is more printing. And so it's going to be really interesting. We're kind of in this, middle ground area where we still haven't even come close to the highs from 2000 when priced in gold. So this is just another chart I'm looking at. And then finally, this is the S&P 500 when compared to Bitcoin. So I wonder can I take I don't think I can take the Bitcoin chart out, but in orange here is the Bitcoin log chart. And then in green is the S&P 500 priced in Bitcoin. And you can see pretty much since Bitcoin was launched in 2009, it's just a straight trend down for stocks when priced in Bitcoin. And what I'm really looking at here is like, there are times when the S&P 500's outperforming Bitcoin, and those are the times that you probably want to be stacking Bitcoin. And while we're not really in like a huge time of stocks outperforming. I mean, they definitely outperformed last year, and there's been kind of a tick up in stocks priced in Bitcoin. And so that's just something I'm looking at. I think there's huge opportunity here, guys. Obviously, this is not financial advice, but this is just me looking at it from my own perspective. Sentiment is low. The fundamentals have never been stronger for why Bitcoin is valuable. The metals are running, so clearly there's demand for this bearer asset, something you can hold yourself that can protect against fiat debasement. And guys, I just don't think there's a better asset than Bitcoin to do those things. I just don't. And the fact that Bitcoin's been lagging so far behind gold, you can see we're on this trend line. Like, guys, I think there's huge opportunity here. And I'm stacking the shit out of more Bitcoin. So yeah, thanks for letting me blurt all that out into a podcast. If you enjoy this, follow me on wherever you listen to podcasts, subscribe on YouTube. If you've got feedback, leave a comment. And I don't really get many comments, so I'll probably read it and get back to you. And let me know what you think, what you want to hear about next. But yeah, thanks everyone for joining, and I will talk to you all in the next episode.